Happy Friday, ladies and gentlemen, and welcome back. It's your friendly neighborhood PM with your top 3 market points of the week. Now, there was some chop this past week, but it does look like we are trending for a positive week overall. So, without further ado, let's dive into your top 3 points. Kicking us off at number 3, it is Spirit Airlines shutting down. So, Spirit Airlines, the budget carrier, did cease operations this past week after a government bailout did not come through. Now, this left thousands of travelers stranded mid-journey and caused competitors such as United and American to try to swoop in and rescue these passengers with either rescue fares or price cap tickets to get them on their way. In addition to that, these same competitors are also trying to find a solution to absorb Spirit's workforce into their own systems. Now, in the end, though, this is one less budget carrier you can look to for travel purposes when it comes to airfares. And right now, you're stuck with Frontier and Allegiant going forward if you're looking for that. At number 2, it's Iran escalation. Once again, another update on the war in Iran. Right now, we are still in a tenuous ceasefire right now. However, there has been some escalation over the last couple of days as the United States has started targeting missile facilities and drone launch sites in Iran after Iran seized an oil tanker trying to traverse the strait. Now, there is a U.S. proposed peace deal out there at the moment to end the war, and it is waiting on Iran's response, which would come via Pakistan in a couple of days. But right now, we are starting to see cracks in this tenuous ceasefire, and that risks undermining any resolution going forward. In addition to that, the president has come out and said that if Iran does not accept the terms that were put into the peace deal, well, then the lethality of the strikes from the United States will increase towards Iran. So there is rhetoric of escalation going forward, and it's a rapidly evolving situation. And then finally, point number 1, like we mentioned last week, is labor market data and non-farm payrolls. So non-farm payrolls did come in higher than expectations, adding around 115,000 jobs this past month. In addition to that, the unemployment rate stayed steady at 4.3%. Now, once again, this continues to reiterate that we are in a largely low hire, low fire environment right now, as layoffs have not really picked up coming in, and AI adjacency jobs have really started to pick up and lead to that modest job growth going forward. So right now, still robust job market at the moment, not as much job gains, but unemployment has stayed restrained. That does it for your top 3 points this week. What are we checking out for next week? Well, next week, we're going to keep our eyes on inflation data and CPI. And I'm really starting to check whether or not the oil pressures from the war in Iran are going to start being reflective in those numbers. I know me personally, I'm starting to see gas prices at the pump above $4 a gallon. We're seeing some in California upwards of $7. So we're going to be waiting with bated breath for that data next week. Now, that does it for this week's video. As always, if you have additional questions, please reach out to your financial advisor. And if you do not have one, please follow our link and we'll be happy to get you connected with somebody. But as always, please go out, enjoy your weekend, and we will see you the same time next week. Thanks again.